So today was not the best day for the stock market or for SoFi stock for that matter, which is what we're going to break down in this video. We had the S&P 500 go down 0.7% on the day. We had the NASDAQ completely crap the bed, down 2.3% as the Russell went down 0.9%. And believe it or not, guys, which we'll talk about this a little bit more later in the video, the Dow Jones went up 0.5% on the day. The VIX went up on the day as well, and we had SoFi down about 3%. So jam-packed video today, guys. We're going to break down SoFi. We're going to go over the overall stock market. We're going to break down charts. You guys know the deal. But before we do that, don't forget to get your free money from Moomoo, the sponsor of today's video, guys. Up to 16 stocks, each up to $2,000. All you have to do is use that link down below, open up your account, fund it with at least $100. You get 5 stocks right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys, the best part of the promo: fund your account at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which Tesla stock's trading in the mid 200s and Expedia's right around $120 per share. So this is a no-brainer, guys. And of course, that is an affiliate link down below, so it does help out the channel. I appreciate you all as always. And with that being said, cheers. Let's dive right into the video, starting off with SoFi stock. Then we'll cover what the indexes are doing right now, which, well, the markets are closed right now, and all of them except for the Dow ended up going down a pretty big chunk. So let's start off here with SoFi, which, like I said, went down about 3%. And notice a lot of the selling for SoFi came in the morning. You guys probably saw a pretty big dump from around 10 a.m. on the East Coast. Funny enough, it went from $10 at 10 a.m. on the East Coast all the way down at 9:37 by the by a half hour later. You know, the mid 10s, right? 10 a.m. or 10:30 a.m. rather. We went down to about 9:35. So that was a drop of over 6% on SoFi. And mind you, it actually ripped in the morning out of the out of the gate. When the markets open, we had SoFi open rather at about 9.65, and it ran at $10. But clearly that did not hold at all, and then we went from $10, like I said, to 9.37. Then we ended up consolidating for the rest of the day. You guys can see we had a little bit of a rally to about noon on the East Coast. Then we held flat at about 9.60, 9.55 for the rest of the day. So you guys can see pretty choppy day. I mean, this is expected, especially with a stock like SoFi, and especially when the markets are red, guys. When the markets are red, there's elevated volatility. Smaller cap stocks, or whatever you want to call SoFi. It's not a micro cap by any means, but it's a company that's not a huge company at the end of the day. These are more volatile on days where the markets are all over the place and in the red. It's just how it goes. It's the way the game is, the nature of the game, right? So SoFi now is down on the, it's not down on the 5-day. In fact, we're still, holding an uptrend here, but it's down on the day, 3%. And now on the 5-day, we have, like I said, higher lows being made, but at the same time, we're in a wedge. Lower highs are being made, right? You guys can see that right here. Let me draw it out. So over the past 2 days, if I zoom in, we hit 10.15 roughly. That was yesterday. And today we peaked where? Where do we peak? We talked about it at $10 per share. So what is that? We hit a lower high compared to yesterday, and here we are now. Now we're pretty much sandwiched in this wedge, just waiting on what direction we're going to pick. So SoFi's in a very interesting spot on the 5-day, no doubt about it. And if I pull up the 10-day chart, let's peel the layers back a little bit. We're right above the 180 SMA. That's a big support. It has to hold that. The bulls need to hold that, guys. If not, I mean, this thing could sell off in the short term. You guys know how that could go. I mean, if we were to break the trend in the very short term, and that could lead us to actually go down to the 180 SMA on this 1-hour chart. Again, if we go to that 30-minute chart, the 10-day, we break the 180 SMA, which is at 940. I might as well set an alert now as a precautionary measure. Why not? Mark is at or below 940. If that does break, guys, on the 1-hour chart, then we can go down again to the 180 SMA, which is right at $9 per share. You guys can see right here. So that could be a spot where it does go. If we do break that little uptrend that we're seeing on the 5 and 10 day, and if I pull up the 4-hour chart, if we were to break that little uptrend on the 5-day, 10-day, 20-day, we could start going down maybe to the 50 SMA on this time frame, which even if we were to go down to $9 on SoFi, guys, even if it were to go down to $8.50, guess what? The bulls technically would still be in charge. And to be honest, that'd be an interesting setup heading into earnings. I mean, look, we have earnings on the last day of July, right? Let me double check that to make sure. Yep, last day of July before the market opens. Let's say, for example, SoFi hypothetically goes down another $1 heading into earnings. That might not be bad, because if earnings come out stronger than expected, maybe guidance is better, maybe something comes out of left field, or they just simply do better than the estimates, and we're down a good chunk heading into earnings, that could lead to, guess what, an explosion after that, because the stock would already be oversold in that scenario. But of course, nothing's guaranteed. We don't know exactly what's going to happen. We're just, throwing out ideas, and that's possible considering earnings are in about 11 calendar days from now, and we do have a bunch of trading days left until earnings. So if we do sell off, I'm telling you guys, into that earnings report, that could be opening up a crazy opportunity. We'll see. I'm not telling you guys what to do, as always. I'm not a financial advisor, but I'm looking at it very closely in the short term. Maybe for that. We'll see. We'll see if it does end up playing out. So that's SoFi. Now let's transition quickly to the markets, which, holy smokes, guys, the markets are not doing well at all right now. We have the Russell down 0.9%. Let me pull this up. RUT, pull it up, on your charts too, if you guys want to look at it. This is down 0.9%, nothing crazy, but it is cooling off a little bit, right? We blew right through 1960, which you all probably remember. That was the high from the middle of February, so we blew right through that. And now, guess what? We ended up pulling down, and we closed above 1960 today. So even though the Russell went down almost 1% on the day, it is still holding nicely above an old resistance as support, which is really good for the bulls. And the NASDAQ, let me pull that up and show you guys on Triple Q. What did I say yesterday? What did I say? Did I not say markets were getting stretched, and maybe after earnings or leading into earnings of these big tech names, we could see a bit of a sell-off? And for sure, Netflix and Tesla sparked the sell-off, which we'll talk about Netflix later on, so make sure to subscribe, guys. We're almost at 30,000 subscribers, and guess what? It's 100% free to subscribe to the YouTube channel, so do that. I appreciate you all, as always. What sparked the sell-off was Netflix and Tesla, both of those stocks getting just completely clobbered today. We had Tesla down 10%, and we had Netflix down, I think, 8.5%. So they're not setting the tone nicely for the other big tech names coming up. And the markets, let's be honest, got a little bit, spooked. That's what we're seeing. We have Triple Q coming down to the 4-hour 50 SMA, and mind you, the uptrend still holding, not only on Triple Q, but of course on SPY as well. So it's not anything that anybody's really panicking about at this point. It's just that the markets were looking for a reason to sell off, and they got it. I believe Netflix missed on revenue, which we'll talk about more in my next video. Again, make sure to subscribe, guys. Tesla's pushing back the Cybertruck, or they're not clear on the release of the robotaxi, stuff like that, right? They're pushing deadlines back or whatever. So look, that is what the markets, it's not what the markets were looking for, but the markets were looking for a reason, and Tesla, Netflix, they're down, boom. That's the reason that the markets are selling off right now, at least in the short term. And the Dow being up 0.5%, that's because of Goldman Sachs and Johnson & Johnson. Goldman Sachs today went up 3%, and we had Johnson & Johnson go up a whopping 6%, massive move. So that helped out the Dow tremendously, which we'll talk about in my next video. Make sure you guys, again, subscribe, and you might as well hit the like button while you're at it. Run the likes up, and I guess with that being said, I'll wrap it up. If you enjoyed the video, again, do all that. Let me know your thoughts in the comments, and don't forget to get your free money from Moomoo, the sponsor of today's video. Use use that link down below, simply open up your account and fund it with at least $100. You get 5 stocks right off the bat, and fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys, the best part of the promo is if you fund your account at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which this is a no-brainer, guys. It's the best promo right now by far, and of course, it is an affiliate link. If you use that link down below and do all that, get your free stocks. It also helps out the channel. I appreciate you all as always, and with that being said, cheers. I'll catch you in the next video.